Hey guys, welcome back to another episode of Health Insurance 101. Today we are talking about health share plans. This is something I've been wanting to do for a while. This is something that a lot of people are going to with the increase in premiums and deductibles. A lot of people are turning to these health share plans in order to fulfill their insurance needs. There is so much that I could talk about today. I could spend probably an hour just talking about the ins and outs of health share plans. I wanted to keep it a little more brief, so what I'm going to do is I'm going to be working on a document for you guys, just a little PDF that goes into a little more detail on what I'm going to be talking about today. So health share plans, the biggest thing with health share plans that you need to realize is they are not insurance. Health share plans are an alternative to insurance. What this means is that health share plans are not regulated the same that health insurance plans are. With health insurance plans, there are several regulatory laws and regulatory bodies overseeing it, and there are several things put in place with health insurance that are built to help consumers, to protect consumers. With health share plans, those regulations are not in place. When you read through a health share plan guideline, there are two things on every guideline list. Number one is this is not insurance. They're very clear about that whenever you're signing up, that you are not signing up for an insurance plan. The second thing you will notice on every single health share guideline is there is no guarantee of payment for claims. That is a hugely important thing to understand when you're talking about going into a health share plan. With true insurance companies are regulated and required to maintain a cash account with enough funds in order to pay the claims throughout the year. What this means is if a health insurance company goes bankrupt mid-year or has issues, they're not bringing in enough money throughout the year, there's still money in that escrow account in order to pay claims of their clients. The other thing is with insurance companies, if an insurance company goes under and does go bankrupt, there are actually organizations and regulatory bodies that maintain cash accounts to pay the claims of defunct insurance companies. So if your insurance company goes under and you no longer have insurance, there's still those funds in order to pay the claims throughout the year. Health shares do not have this. Instead, with health shares, you are a member and you're paying a membership fee into a pool of money. Now, each health share company is different with how they handle those funds, but in essence, there's that pool of money from the membership fees, and all claims are paid out from that pool of money. What can happen sometimes is if there's not enough membership fees being paid in throughout the year, then there's not enough money to pay out claims. Now, there are several insurance companies that are very well known for paying out claims. They do a very good job of handling that money, and they have internal things that are helping protect their consumers in order to make sure that claims are getting paid. So when you're looking at health share companies, just be careful and make sure that you're looking at a health share company that's going to be consistently paying out claims, that doesn't have a bad reputation for just consistently not paying claims, and that's going to have a good cash account. Those are very important things. Now, another thing with health share companies is you are the responsible party anytime you go to the doctor. With traditional insurance, you go to the doctor and you hand them that insurance card, and that is actually a contract between your doctor and the insurance company to request payment from the insurance company first. Now, obviously, you have co-pays, you have deductibles that you have to meet with insurance companies, but when you hand them that card, they go to the insurance company first and say, okay, how much is this procedure going to cost, et cetera, and then later they bill you. With health share plans, you walk into the doctor and you are considered a self-pay patient. What this means is any procedures that they do, any sort of visit that you have, it is going to be a cash pay visit. You are paying upfront regardless of the procedure. Now, with things like doctor visits and wellness checkups, this is usually not a problem for health shares because you're usually paying a copay for things like that anyways on insurance. Where you can run into problems with health shares is if you have a surgical procedure or you have something a little more major come up. Most hospitals and surgical centers actually have a requirement of cash pay patients of 10 to 25% up front before they will even schedule the procedure. So if you walk into a surgical center to have an outpatient appendectomy scheduled, they're going to say, oh, you don't have insurance. Well, then you have to pay X amount of dollars before we'll even schedule the surgery. This is not necessarily a bad thing if you have the cash on hand, but if you don't have the cash on hand, then that just delays your service and could delay your treatment. And sometimes it could be something that's really vital that you need done. So that is something that's very important. Health share plans are not insurance. They're not regulated like insurance, and many of the protections that are put in place in the background of insurance companies are not there for you on a health share. Now, like I said, there are several health share companies that are very well known for paying claims. They handle the funds well. They handle the process well. So I'm not saying don't go with health share. What I am saying is be careful and understand what you're getting into whenever you go with the health share. Another thing I wanted to cover was that of reimbursement. Because you are a cash pay patient with health shares, a lot of times the health share companies, just on average, it's about a 3 to 6 month wait to get reimbursed for medical expenses. If you have something like a credit card that you can put medical expenses on, or you have a significant savings account, sometimes that may not be an issue. But if you have a major procedure and you use your savings to pay that upfront 25% and then you have to wait 6 months for reimbursement, a lot of times you can run into some problems with the health shares. Finally, with health shares, one of the biggest things with health shares and how they kind of help keep costs down is they are highly underwritten. So what that means is pre-existing conditions on a majority of health shares are either not going to be accepted at all, or they have a very drastic waiting period to get coverage for them. Most health shares will either not accept major pre-existing conditions, or they will have anywhere from 3 to 5 years waiting period before you get any coverage for those medical conditions. So if you have major pre-existing conditions, a lot of times the health shares really are not going to be a good option for you because they're not going to cover any of that until you're way down the road if you can get on a plan. Like I said, there is so much more I could go into on health shares. I will say this, the biggest thing that you need to understand with health shares is do your research. Look at their guidelines. Read through their guidelines. Health share companies are not out to get anybody. I will tell you that. You may read reviews that oh, these are terrible people. It's a pyramid scheme. Guys, health shares are trying to give a service. And when it comes down to brass tacks, they are probably some of the most transparent companies when it comes to what they are giving you. Their guidelines are readily available on their websites. You can download their guidelines and read through their guidelines very clearly. And they are very clear about what their plans cover, what their plans don't cover, what you can share, what you can't share. And they are also very clear about the two things that we discussed. Number one, they are not insurance. And number two, there is no guarantee of payment. So they are very clear about that. So if you are considering a health share plan, the biggest advice that I could give you is do your research. Read through their guidelines. Make sure that they are a reputable company. Make sure that you take the time to look into the company. Do they have a good cash base? Do they have the resources to pay claims? Are they well known for paying claims? And just remember, if you go with a health share plan, it is not insurance, and you cannot look at it the same way as insurance. And a lot of the things that are protecting you behind the scenes with insurance are not there to safeguard you. I hope this helped you guys. I'm sorry this video was a little bit longer. Like I said, this could have been an hour long, but I will get that document onto our page later this week, and hopefully that will help you guys. As always, if you have any questions, please give us a call. We are happy to help anybody regardless their situation, and we look forward to serving you. Thank you guys.